Collective research. Active fundamental research in global capital markets. Make informed decisions.
Taxation in Iceland. Taxes in Iceland are levied by the state and the municipalities. Property rights are strong, and Iceland is one of the few countries where they are applied to fishery management. Taxpayers pay various subsidies to each other, similar to European countries that are welfare states, but the spending is less than in most European countries. Despite low tax rates in relation to European welfare states, overall taxation and consumption is still much higher than in countries such as Ireland.
Income tax in Iceland. Income tax is deducted at the source, which is called pay as you earn, pay. Each employee has a personal tax credit of 53,895 Icelandic kroner per month, 2018, which is deducted from calculated taxes. Unused credit may be transferred to one's spouse. Mandatory employee pension insurance is 4% of gross income. Employer provides a minimum of 8%, and another 4% of total income may be deducted for private pension insurance. If so, the employer is obliged to pay additional 2% premium for the benefit of the employees.
Income tax rate for the year 2023. Taxable income includes, for example, cash payments, wages, fees, sickness allowance, and benefits in kind. He is allowed the same deductions for expenses as residents, i.e. the mandatory payments to pensions insurances funds 4% of total employment income, and in addition voluntary pension insurance premiums of up to 4% of total employment income.
The personal income tax rate in Iceland stands at 46.25%. Personal income tax rate in Iceland averaged 44.80% from 1995 until 2023. Reaching an all-time high of 46.90% in 1996 and a record low of 35.70% in 2007.
The corporate tax rate in Iceland stands at 20%. Corporate tax rate in Iceland averaged 22.71% from 1993 until 2023, reaching an all-time high of 33.00% in 1994 and a record low of 15.00% in 2008.
Corporate income tax. CIT. One of the business taxes in Iceland is the corporate income tax. Corporations that are residents pay the corporate taxes in Iceland on their global revenue, less operating expenditures. All of the expenditures and costs required to generate, secure, and sustain revenue are included in deductible operational expenses. Limited liability corporations, LLCs, and limited partnership businesses must pay the Iceland corporate taxes at a rate of 20%. Various other corporate organizations, such as partnerships, are subject to CIT at a rate of 37.6%. Non-resident organizations that receive revenues for goods or services rendered in Iceland, in addition to those that operate permanent establishments there or earn from them, are liable to pay Iceland corporate taxes for their revenue at the equal rate that is applied to resident companies.
Iceland. Tax revenue, percent of GDP. Tax revenue, percent of GDP, in Iceland was reported at 21.62% in 2021, according to the World Bank Collection of Development Indicators, compiled from officially recognized sources. Iceland. Tax revenue, percent of GDP, actual values, historical data, forecasts and projections were sourced from the World Bank on November of 2023. Iceland tax revenue. Iceland tax revenue was reported at $2.436 United States BN in June 2023. This records an increase from the previous figure of $2.231 United States BN for March 2023. Iceland tax revenue data is updated quarterly, averaging $1.493 United States BN from March 2002 to June 2023, with 86 observations. The data reached an all-time high of $4.426 United States BN in March 2016 and a record low of $647.675 United States MN in March 2002.
If you would like us to research a stock, please tweet at Collective Rec or leave a comment here.
Like and subscribe for potential investment ideas. Become a member at www.collective-research.com.
Receive investment ideas before they are published.
Collective research. Active fundamental research in global capital markets. Make informed decisions.